Welcome back to week 41 of my TFSA portfolio. If you guys are new here, my name is Daniel, and here on this channel we talk about Canadian stock market investing. So if that's what you're interested in, then be sure to click that subscribe button down below. But this week I'll be talking about 5 different stocks which I added to my portfolio. One of these positions is completely brand new, and at the end of this video we'll go over the stocks that I'm planning to buy next week. If you guys are new to investing and don't know which brokerage to use, well, I highly recommend Wealthsimple Trade. They have 0 commission fees on their platform. It's a very nice, sleek, and simple platform to use. And best of all, you can get $50 for free for signing up today. If you don't feel comfortable investing yet or are trying to find a place to put your emergency fund, my personal favorite is EQ Bank, and currently I'm earning 1.25% on my cash that I have in there. Links for both of these accounts are in the description below. Now moving on to the 5 stocks that I bought this past week. The first stock that I bought on December 20th was $25 worth of Shopify in a fractional share purchase on Wealthsimple Trade. I paid just under $1,700 for this purchase. I believe that Shopify in the long run will do very well, but right now in the short term, everyone thinks Shopify is way too expensive. I think that Shopify has a great business model and they continue to attract small businesses and even medium and large businesses onto the platform. The main advantage I see for Shopify versus merchants going onto Amazon is that you can customize your website to your own branding needs. And I think buying products off of a Shopify merchant, you get a more personalized touch to those products, or at least these products don't seem like cheap Chinese knockoffs. If you're looking for cheap stuff that just get the job done, then going to Amazon is the best bet. But if you're looking for something a bit more premium or a bit more personalized, that's when you go to a Shopify store and you buy products from actual companies out there. And Shopify is rolling out fulfillment services slowly to all their merchants, because this allows Shopify merchants to pretty much match the shipping time of Amazon. And for me, I do some small business on the side where I sell stuff on Shopify, and I know that the fulfillment network would be game changing. It would allow me to compete with Amazon, but currently I don't think I'm eligible for Shopify fulfillment, at least last time I checked. Now rolling forwards one day later, this is a new share that I added to my portfolio. And this company is none other than Nuvei. And I talked about the stock just 3 or 4 weeks ago when the short seller attack happened. The stock plummeted from over $100 per share to around $60 or $70 per share. And this kind of raised a flag in me to look at Nuvei and see if there's any value there. I did a deeper dive video which you can check out right up here in the right corner if you're interested in that. But I made my first purchase, a fractional purchase of $30 for a cost basis of around $77 per share. Unfortunately, the stock continued to go up later in the week when I decided to buy a bit more, where I bought a full share on December 24th. I paid just over $80 per share. And on Christmas Eve, the Santa Claus rally seemed to be happening, which you'll see later on in my total portfolio view, where most of my positions are up. But I also made 3 other purchases on the 24th. The first one being Air Canada, which I bought 1 share for just over $21 per share. Then I also bought another share of Enghouse at around $48, $49 per share. And finally, to cap off the week, I bought 2 shares of D2L at just over $13 per share. All 3 of these companies are currently down on my portfolio, but in the long run, which this portfolio is geared towards, I think that the stocks will perform well. Currently, I think there's a lot of short-term headwinds for these stocks. Air Canada has Omicron. Enghouse, they're an acquirer of companies, and currently companies are very expensive to buy, so they haven't been doing that. And for D2L, they just IPO'd, and not many people know about this company. So the investor base for D2L is fairly small right now, so I think there was that sell-off there. And the stock market for the short term is like a voting machine, and they probably see these facts about these companies, and I've decided to sell them off. But in the long run, I think these businesses will do well and they'll end up recovering. So for that reason, that's why I'm dollar cost averaging into them this week. Now let's hop over to my computer and talk about the entire portfolio and what stocks I'm looking to buy next week. Now taking a look at the 1 week performance column Q here, it's updating just because I'm filming this as the stock market is live right now. We can see that Nuvei is a clear winner for the past week. Unfortunately, I wasn't able to film this video over the weekend just because of the holidays, but when I was looking at the portfolio then, actually almost all the stocks were in the green, maybe only 1 or 2 were in the red. Now looking at the biggest loser over 1 week, we've got the Bitcoin ETF down around 7%. So it looks like the Bitcoin ETF didn't benefit from this Santa Claus rally that it seems like we're having right now. Now when looking for next week or this current week what stocks I'll be adding to my portfolio, I typically like to sort my portfolio by percentage returns. Because this portfolio is a long-term portfolio and all these stocks I plan to hold for 3 to 5 years, and I think they will do better 3 to 5 years out from here, I tend to add to my losers, because the market in the short term is like a voting machine, and the market has voted that these stocks in the short term aren't doing as well. So I think that if I add to these positions that are down in the short term, in the long run, they should be able to pick up and have a positive return. Stocks like Air Canada, for example, have been hit because of the whole Omicron incident that's happening right now, so less people are traveling and a lot of people are actually canceling their trips, which is why Air Canada is down by 11.6%. It's one of the stocks I'll be adding 1 or 2 shares every single week just because I think that Air Canada eventually will recover. Enshow Systems is another stock I've been buying pretty much every single week ever since it's dropped below $50. So it's another stock that I plan to add next week. D12, this is a position that's still relatively small in the $300 range. So I'll be adding to this position as I do think this for the long term is a good play because they're an education technology company and the market hasn't realized their true potential. I know that a lot of Canadian universities use their platform and it's one of the best out there. Another stock for next week that I'm planning to add more to is Nuvei. And that's because they just got hit by a short seller report and are down significantly from their all-time highs of around $170 per share. Right now at $84.99, it's a relatively decent price in my opinion, and the company has a positive net earnings. So this shows me that the company is able to produce cash and fund their operations, and I think the short seller report was unwarranted. Currently in my position, I'm already up by 5.85%. And I think that there's still a lot more upside, so I will be buying the stock, possibly in fractional share format or even an entire share next week. Now closing off with the total portfolio metrics, the percentage change of my entire portfolio is 3% today. And right now the gain on this portfolio, in my opinion, is not the greatest actually. Typically the stock market goes up on average by 7%, and this past year was actually a really good year. But keep in mind this portfolio I started with $2,000 and every single week I've been depositing $200. So it's not really a fair comparison if I just take a look at my portfolio, I guess next year in March, and see if I had a 7% gain, because I've been depositing $200 every single week and not every $200 had a full year to grow 7%. If you guys have any suggestions or know how to do a time-weighted percentage gain, let me know in the comments down below. If you made it this far in the video, thanks for supporting my channel. And if you guys want, I've got a couple of videos up here that you can check out. If you're there, I'll see you there. If not, keep up the grind and have a great day.